David Ohana, Managing Director of Kenol Kobel. Pleasure to be speaking to you today.
Pleasure.
David, I just wanted to first talk to you about who you are, when you got here and what your background, because a lot of people have seen this outstanding performance, but they're probably asking themselves, who is David? So tell us a little bit about yourself. You were saying that you were in the army in Israel.
Yeah, I joined Kobel in 2002, October. So 16 years now here. Yeah, I was in Israel. I was in the army as any other Israeli. I was a paratrooper. I'm a major. Then I did a bit of other stuff related to that. And then I joined the pipeline. Same like KPC here.
Yes.
Same systems, you know, the British colonies. So it's called IPC there. I was there like 3.5 years. I'm economist, university in Israel. Then I got exposure into the oil industry in Israel.
Yes.
Again, by luck, I was in charge on a installation, a big depot for jet.
Yes.
So then the MD picked me when I was a student, picked me, and because of my background in the army,
Yes.
then I got a position of an economist, then the rest is history. I got the exposure there, then I applied for a job here as head of operation in Kenol Kobel.
Yes. So you came here in 2002.
2002 October.
Yes.
And yeah, all my career in Kobel, in Kenya is in Kobel, different positions, head of operation, head of marketing, GM Kenya, and from 2013, I'm the group MD,
Yes.
in charge on Kenya and another 5 countries outside.
Let me now take you back to 2012, 2013, this time when you become the managing director. I remember there was a very sharp move in the currency. Kenol took a big hit. I think when the currency went to 107, you guys took out a protection against it going even higher. And tell me what, you know, when you took charge, what was the scenario? You were describing it a little bit earlier, that you had to make hard decisions. What was that?
Yeah, the main issue was, as you described, the issue of the currency. We got a hit because the government took the interest rates to 18% from 2-3% within 3 months or 2.5 months. Then it went sour, all the hedges. So that 2012, we reported a huge loss before tax around $90 million. So it diluted all the cash from the company, big loans. And I took the group 4 July 2013. Simply was no cash, you know, paying salaries and a lot of expenses. So it was to restructure the business completely. So we laid off a lot of staff, actually more than 50% of the, as we stand today.
Of your headcount? Yeah,
of the headcount, and salary bill was like, we crashed the salary bill, I think, by 70%, 60%. Yeah, the salary bill was huge. We just, in short time, we intense restructuring. And generally, we looked at expenses because I couldn't pay people.
Yes.
Simply, and the interest bill for a month, financing cost, what we call here in our reporting, was like $2.5 million in a month. Ooh. We don't pay it in a year.
Yes.
If you check all of 2016, the entire bill for finance cost was 1.4, 1.5. So in a month, we were paying $2.5 million. So finance cost was huge,
yes,
on one hand, and expenses, we were spending like crazy here. So it was to reduce the spending, which we just entered to cost cutting aggressive. Yeah. We sold some non-performing assets like land just to get cash and pay debt to reduce. We sold Tanzania,
yes,
which was a loss-making business, $3 to $5 million every year. So we got the cash, we paid debt, and we sold some piece of land here in Kenya, again to generate the cash to repay the banks. And we started focusing on high margin, like lubricants, LPG, service stations.
Yes.
And we disengaged with low margin business, just to consolidate.
What is low margin business?
Generally today, you know, when you compare, it's funny that I'm saying low margin, but by then, you know, it's a reseller. Yes. When you sell to other parts, so this we stopped almost completely. Some accounts which are on like consumers, B2B, It's on credit, 60 days, 45. We couldn't afford to give credit. So we just scaled down the business to cash. And I can tell you even today, most of our sales, like 75, it's a cash business. We are the model we are running now, we don't extend much credit. We have some, but a very short period. Yeah, and it works well. It helps to, reduce still finance cost. Finance cost is something I'm fanatic on it.
Yes.
Yesterday we paid back like $1.5 million to one of the banks. It's an agenda that
but I can see
we want to deleverage the business completely. In Africa, to borrow money, it's quite expensive.
Yes.
And I think many of my competitors, and while you look at what's going on in the banking industry, people were even MDs of banks, like 3 when I started, they were asking me, why you're so fanatic to repay loans? It's good to have some leverage in the company. And look where we are standing today. Banks are actually unwilling to extend credit to corporates.
So there you are, you've cut your payroll, you've cut back on the low margin businesses. We're talking 2013. Yeah. And now we're looking here where we are today in 2017. I mean, extraordinary results. Massive revenue gains year on year, mind-boggling ones. How would you describe, was it those things you did in 2013 that made all the difference? And then how are you poised for growth? From what I can hear, from what you're telling me, you're deleveraged, you've got a strong balance sheet, you've expanded to 5 countries. It seems to me there's an opportunity here for you, David.
Yeah, I think we are standing a good opportunity for growth, even from the good balance sheet that we just reported in the first 6 months. Initially, we started in 2013 this journey, but nothing changed. We still very much focus on finance cost, expenses, or to cut expenses. We don't allow ourselves to employ more than we need. So we are very keen on who we bring in. The business and the volume really grew. Because if you check 2013, I was selling like in a month, like 45 million liters. Today we are at 120. So the volume actually grew.
You've quadrupled.
Yeah, we are market leader. Yeah, we are market. It's actually 300% up, while finance costs crashed.
But how did you do that? Because the market wasn't growing that big, was it?
Yeah, we just took market share.
You took market share.
When I took over, we were 11% market share. We are hovering now with the data of PIA around 20%. So we are leading the market here in Kenya, which is our main market. Yes. It's Kenya for us is like 70% of contribution to bottom line and to volume. So yeah, while we deleveraged the balance sheet, we grew on volume, and we entered in a way to what I'm calling low margin, which is the trading, the OTS. We are dominant there. We are like 22%. Yesterday we won a cargo. It was a tender yesterday of OTS. We are active in the OTS. We got barrels from Saudi Aramco. We are the only company with the direct barrels with them. So it gives us some advantage in the OTS. So this year we were active. So it's a low margin, but we grew on the high margin to a level. In retail you cannot grow forever. So as balance sheet got better, and we restructured also our banks. We were using French banks in the past, the like of BNP, Société Générale. We moved to Dutch banks, which are more efficient, cheaper, the Rabobank, ING. So it was a lot of I was forced to prepare ourselves to be competitive in the OTS because we were charged very expensive with those French banks. And now we are actually trying to grow the business. So trading today is a nice source of income for us, which is on small margin, but still we like triple the income in the first half from what we did last year, trading alone. So it's low margin, but now I need to give the story to the investors where we go. It's simply growth. Opportunities are, look, I see my competitors, I see the market.
Yes.
I'm 16 years here, so I feel the market.
So tell me about the market here and then the rest of your geography.
Yeah, the market here, I think going forward we'll see consolidation in the Kenyan market. We still have like 80-something companies registered, oil companies. It's crazy number. You can't afford it. And I think if Ministry of Energy wants to see standards and must be some And it will be, it already happened. It's already happening. We saw some companies on the shelf for sale. We heard about Hashi being sold, I think, to Legas from Tanzania. We saw OTI coming, I think, 40% stake into
This is the
Haas.
Omanis,
Yeah, Oman Trading. So it started already, and we are hearing in the M&A world that some companies are already looking for strategic investors. So it's already in
so
the...
it's a little bit like the banking industry then, from what you're
Correct,
describing,
correct,
right? Smaller
correct.
operators,
Correct.
not sufficiently capitalized.
It's actually a game of capital, and putting a ship on the water today, it's $40-45 million, the ones we bring here. Not every company can afford it. And I think the focus, it's what some of the companies are lacking. The market is much more regulated compared to the past. There is ERC, which is quite active, Ministry of Energy with great leadership there, quite involved and guiding us. So all things that maybe in the past some small guys were able to do, gone. KRA, quite efficient. You can't discharge a ship today if you don't pay the taxes in advance. There is a lot of things that the government took some decisions in the past which served, and I think and we know some of the small oil companies, what we call the briefcase, cannot sustain that operation. And I can tell you, I can see a mirror picture also in Uganda, which is an immediate market for Kenya. This week I was in Rwanda. You see the same. It impacting the sanity that we see in Kenya. It spills over. You see Tanzanians copied the OTS, they call it BPS there. It's a mirror of the OTS. So games or funny games that we got used over the years in the oil industry gone. People need to comply. We can see in the pipeline proper leadership in KPC, so they are demanding everyone to have a line fill. Line fill is cost of finance because you have a debt stock.
Yes.
When you need to fill a line because the lines are always full,
Yes.
Everyone need to comply. In the past, it was 5-6 companies, contributing to the line fill. Today, if you are in the game, you must have. So we saw some decisions that forced people to inject more capital, which they don't have. And we know it's not a secret that many companies are struggling. I'm quite happy to do well when, people in pain. But again, we are ripping off from what we did 3, 4, 5 years ago, where we decided to cut costs to repay loans.
Yes.
And today we are attractive to banks because first we paid off what we owe them.
Yeah.
And look, the 6 months, it's if you check, actually we made
I was
the net
looking,
profit.
your sales were up 96%.
Correct.
I mean, that's internet company territory, right?
Correct.
And then cash, you've got like 2.7 billion sitting on the balance sheet.
Correct.
And it's a fantastic story. Every time I analyze them, I sit there and I'll do great set of results is what I wrote last time.
Yeah.
Let me ask you a few more questions. So if you look at I remember in the UK and everywhere, suddenly the fashion was for your forecourt to become a quasi shopping center. How's that doing? Is that a meaningful revenue stream for you? When you look at it in totality?
Yeah, we partnered a lot with the Insco group, the Pizza Inn, Chicken Inn, the Litos. It's one group. We did a lot. We have some sites with Java.
Are you profit sharing with them, or are you renting?
No, we are renting. We develop for them the sites. We design it with them to their standards. And then once drawings agreed, we go and invest the capital. And then it's usually contracts for 15 years or so. But in 2017, actually, late 2016, we see a slowdown in that.
I saw a quote saying you've had not one new tenant.
Yeah, we have not added this year. We have not developed any site in Kenya because usually the sites which you can have a return on roughly $1.5–2 million investment, it's when you have a lead tenant, what we call, like the Pizza Inn, Chicken Inn, the Art Cafe, Java. They are not very excited to open, I feel a bit heavy in the...
Does that speak to the economy being slow, consumers not having money?
The economy is slow. It's a factual thing.
Yes.
I think it's much worse than we think.
Yes.
I see it on the bank's behavior. I think banks have still huge debt to clear from their books. We see the first quarter. It will be interesting to watch it. First quarter 2018 with IFRS 9.
Yes.
I think will be some shocking numbers.
Yeah,
it's coming. Look, it's not a secret. So it will be, and I think already we can see indicators of some banks started providing large amounts now in participation, not to destroy 2018.
Yes.
So it will be interesting to see the first quarter results of this first half of 2018 for the banks. Generally, I think we had many years of growth in Kenya. Some of it bubbled, like the real estate, I think.
You think that's a bubble?
The commercial buildings are for the next probably 10 years, 15 years. The space.
Right.
Who's going to fill all these buildings in Upper Hill, put furnitures, take employees, pay them salaries? From where this money is going to come, to me it's not clear. So a lot of buildings, hotels came recently. I want to see how it's going to be used. I think the company will slow down before it will take off. There is issues here which are structural. You know, when you see banks which have having no appetite to lend, it tells you something. So the engine, the guys which are supposed to avail the capital for growth when they're out of the market or out of the game. So yes, one of the ways is to remove the cap, but it's really what we want to do, to go back to 18, 20. So what you lend again people on a business model that 20% interest, which business line? Who makes 20%?
Who makes 20 plus in order to pay?
So I think there is something to, and maybe the banking industry need to go through this consolidation and some efficiencies and cost cutting and reduce staff. All these things which are painful, but to me it will be a disastrous to the economy if we open the caps, because me as an executive here, I expect to have a more conducive environment for business to reduce interest rates. Our shilling performing well.
Yes.
If you compare it with other currencies.
Look at other African countries.
Yes. It's doing well. So why we should keep? So what you're telling me, we take now interest rates to 18, 19%. So shilling will go below 100. To 98, 97. What are we doing here? It's good for the shilling. It's good for the economy. But it's really good for business. Who will go? So banks will lend at 20%, which use huge risk like we did in the past. But why the banks not to go and lend to good customers with proper securities? So all the debt you see now, people got excited with above 20% interest. They took extreme risk, non-performing loans, and now they need to provide. What I'm saying, I don't see the sense of going back to that.
Yes.
It's not a real growth. That's what
Yes.
I'm trying to
No,
say.
I hear you.
There will be no return. It will be, banks used to that huge return on any loan that they give, so long it performs.
Yeah.
The moment it go bust, you see what's going on now.
That's right.
And somebody need to take those banks to a pressure test to see that actually all this rotten in the books went out. What I'm saying, there is a lot to do, and I'm just worried that if we remove it, again, we bring again on top of huge rotten assets that we have in the economy, will increase it furthermore. So for the governor, and we have a sheriff in town, we have a proper governor over many years now. Tough job. Look, it's a tough decisions he needs to make, and I hope he will make the correct ones, because the economy, in my last 16 years here, I never saw it so bad.
As now.
The government borrows like crazy. It's factual. It's numbers that we all follow, and it's obvious that corporates are struggling to access financing.
And how long do you see this sort of slowdowns being in place for? I mean,
the recovery, it started last quarter, I think, when I felt it so strong, last quarter 2016. I think it's a long journey to deal with those problematic assets or the debt that we have in the economy, which is banks and corporates. I think it can take 2-3 years to see again some growth. I don't see a quick fix here. Even if you remove the cap, how a guy that took a loan that now we need to go and repay it after restructuring his loan back to 20%, where it's going to come from?
Let me now take you back to your regional expansion. You're in, I think, 6 countries?
6 countries.
And you were in Tanzania, which you
we left.
You left Tanzania. And that's, you said, about 30% of the business now of
The 5 countries,
Yes.
Kenya is 60, 70,
Yeah.
and the countries are 30%. Yeah.
So tell me what you're seeing in the region. Are you optimistic about it? Do you want to target more countries? Do you see more opportunities given your expertise and your ability to navigate what are very volatile markets?
Yeah, we were focusing actually from when we started this recovery, we were focusing on internal growth.
Yeah.
In 2016, for example, we added 30 service stations. We
Yes.
just took leases and,
So how many service stations do you have now?
in Kenya we have 200 and outside we have additional like 185 now. So it's altogether 385 service stations. We are, after Kenya, the big markets for us, it's Rwanda, which we are big there, we are the market leader, and Zambia, attractive markets, Uganda, Burundi, and then Ethiopia. Each market with its own, it's different markets, you need to adjust different rules by the governments. But more or less, apart from Uganda, all the markets we operate controlled environment by the regulator. Uganda is an open market.
You can charge what you want.
Yeah,
Yeah.
it's a market conditions, so it's not regulated. A quite hectic market. It's a lot of independence. But even there, I was there last week. Quite of many companies. It's actually a reflection of what you see in Kenya. I think generally the story of Africa, in the eyes of investors, we interacted with them last week. It's not what it was in the past.
Yes.
You feel people are more cautious, rushing to invest. And again, I see it as a result of too much toxic assets inside the economy, which need to be washed out from books. Once it will happen, I think it will be a more fertile ground for growth. And I'm mainly worried with the banks because I'm seeing something with the banking industry which is alarming because banks, when a banker tells you, an MD of a bank tells you that his shareholders are not willing to inject more capital,
Yes.
it's like it's cutting it's like me not willing to import fuel, so what I'll be selling? It's the product that they are selling. They're having the capital, they need to lend it to us to generate or to gear the economy or oil the economy and paying back the interest. What's happening now that the banks are not playing not performing their duties, I don't see where the growth will come. And it's, what's not clear to me, bank needs to go and see what he borrows from central bank, the shilling. He puts his margin, and he should pass it on to me. So banks in a way should target if it's their 3 or 4% margin. Why when it's capped? And when it's capped, it's obvious that you borrow it from the central bank on a lower rate. If you protect your margin, what is the issue here? Something here not adding up. But again, the central bank needs to, and the governor needs to look at those things. I don't see this economy going back to proper performance without banks getting the appetite.
Okay, so you're saying with the banking sector as it is, it's hobbling the economy.
Yeah, look, we all saw the results in the first 6 months.
Yes.
They are working. We never saw such numbers. It's all down.
You yourself, Kenol Coble, deleverage the balance sheet. The banks are probably seeing you as a tremendous credit.
Yeah, we are now
in a difficult environment. They must all be knocking on the door.
By the way, they are.
Does that make any sort of merger and acquisition activity likely? I mean, do you see opportunities now in that space with reasonably priced money that you can access?
Yeah. First, there is very cheap money in the market. It's good to note. I'm referring mainly to the dollars, which when you talk about M&A or mergers and acquisition, it's on that currency. So yes, we can access, we are, like you said, we've been approached by many banks. We are trying to be, humble, and we treat the banks that help us to recover well. So we don't open facilities just to have them. But yes, opportunities are there, big time. It's something we are looking into.
Are you looking outside Kenya as well?
Yeah, mainly outside Kenya. In Kenya now I'm too big. If I want to grow here, I need approval of the monopolies. It's probably not something that's going to happen because I'm already big.
Yes.
But in other countries I can grow. Some countries are more exciting than the others.
Yes.
So yeah, it's something that it's under, my screen. But we don't want to go and do another entry to a country which is difficult, like we saw in Tanzania,
Yes.
that you're almost impossible to make money. We actually exited Lubumbashi and Tanzania. I sold it as one unit together, and I know from colleagues here in
What
Kenya.
year did you sell it?
Again, in 2016, we started it in 2014, immediately after I took over, and the deal concluded. It took us like 1.5 years to conclude the deal. So end of the last quarter of 2016, I got the last payment. I paid Stanbic the loan, and we exited. And it was a huge contributor to the balance sheet because we were losing heavily there.
Yes.
So the business was, I'm saying, if you want to do an acquisition, it must be in a place where you have some advantage, and I can't elaborate much because, but being big in Kenya, it gives you an automatic advantage in some of the countries which, we are having borders with. So,
So you're looking at the adjacent countries.
Yes. But it's something that now in the situation our balance sheet is, it's something that I'm looking at.
And so describe to me, in 2013, you came, you were the surgeon,
The
you
nightmare.
cut, you used your scalpel, and then now you're reaping that reward in 2016, 2017, these extraordinary numbers, which are absolutely fantastic, confirming what you've been saying. What's the next 2 years?
To grow, simply to grow, either to new territories, and there is some exciting parts that we are looking at. It's simply to grow the business, and we are growing. It's just that we did it without a big acquisition. And again, for me, a issue of M&A, it's only if you get it at the right price.
Yes.
To buy expensive, it's easy. There is many companies which are trying to sell now, but if it comes with a reasonable price, we go for it. So board is very much involved. We have a very active board. We are trying to be open as much as we can. We have been approached by many companies. It's not a secret. People read what we publish. The policy on the dividend is quite strong.
Oh, by the way, congratulations on that.
Yeah, so we pay every 6 months. We pay a dividend to our shareholders.
You doubled your interim dividend,
Correct.
And then I think the full year dividend you also you increased by 28.5%.
Correct.
You must be the.
You see, we are increasing the percentage, and we increase on a net profit, which is keep moving up. We see how the second half will be, but we are very happy with the first half. It's actually a record first half. If you go deep, we actually reported, the margin we generated is 2.1 billion shilling.
Yes.
We reported the 14 because even us, we are clearing some, what I call toxic assets, the yield shift of KPRL, the old KPRL.
Yes, I remember.
So I'm been left with only one bullet in the second half, which is 250 million, and I cleared like $18 million, which from 2001 or 9.
Wow.
It's an old
Yes.
asset that KPRL been closed. There is nothing there, and we don't want to go legal against any government entities. So the board just decided. We hope one day government will reimburse us because it's our money.
Yes.
And then if it happens, we write it back. But we are 3 years now providing for this 1.8 billion initially when I started providing for that. And we are about to end it. So
fantastic.
Again,
Well
it's just
done.
to get the balance sheet lighter and slimmer. And it's a long journey, yeah.
We were at this investor conference with the Renaissance Capital. We were sitting on the panel, and you were quite, you were asked questions about oil and gas, in particular in Kenya and in Uganda. Just tell us, there's so much excitement, and quite often, David, so much PR. We were going to truck this stuff to the port in Mombasa. I couldn't understand why you truck anything like that. Is it a material find in the scheme of the world's oil and gas supplies? And, are we going to get this online in the foreseeable future?
You see, me, I cannot talk PR. I'm an executive in the oil industry, so I must say what, I'm not in any campaign. I'm just saying to be an exporter of crude, you first need to be with proper infrastructure. It's not enough just to discover.
Yes.
Discoveries are good, but they are not huge. So it's nice to be said that we are exporting crude oil, but you can't do it on trucks. It's not something that I saw in any country, and we imported a lot of Marban into Kenya over the many years that refinery was running in Mombasa. I don't see, the way we are standing today, I don't see how we'll end up in the state of the economy exporting a crude. And I'm talking a permanent export, something that you can monitor over years. Look, it's not a secret that there is a lot of crude all over, and mainly in the Arab Gulf. The Saudis having excess. It's not a secret. OPEC having excess. The Americans with the Shale production are just increasing productions. The wells, or the numbers of wells cracking this, it's rocks of this Shale production just increasing by the day. Very much Trump character to.
Yes.
So OPEC trying to counter that, but generally the low levels that we are of oil prices in the last 4 years, it's a result of technology which been improved.
Yes.
So making it cheaper to get the Shale production. Today they drill, if you wish, vertical, horizontal. There is a lot of, movement in technology, and many refineries that what we call the sweet crude, like the Marban, the Brent, that we were using here, but many refineries today can get a very sour crude, which predominantly sour crude is good for bitumen, for fuel oil. Today with technology, you can crack it even into gasoline. So you can access a sour crude and end up with low sulfur and gasoline if you invest in a proper refinery, and the technology already there. So you have excess crude in the world, and in the past where sour crude was not an option, or some refineries today, they can use it, and that's where refineries are heading. So crude oil is available. So we have it also, and also Kenya need to ask, or investor that will come and invest, what is the immediate market for our crude? And today the growth is obviously in the part of the Far East. Far East from Kenya is like, 21, 22 days on the water. It has cost. Each ship like that, $30,000, $40,000 when it's, so it's quite expensive. And on the contrary, remember that we are importing into Kenya like 9, 10 ships every month, jet, diesel, gasoline. So we have our own bill on shipping that we should consider. So before we rush and just say that we want to export, to me the great news of having crude in Uganda and Kenya.
You believe in the refinery?
I believe that within those two discoveries should be a proper refinery serving Uganda, serving Kenya, serving Sudan, southern part, Rwanda, Tanzania, Burundi. If you take the population of all the countries I mentioned, South Sudan, southern part of Congo, which even today from Kenya I'm exporting there.
Yes.
You're talking about population of 350 million people.
Yeah.
And all this fuel coming now 10 days on the water from the Arab Gulf. So if you produce it here, you avoid
importing.
So me, I see a refinery being fed from maybe two sources, reducing on an agreement that will be signed that will reduce to cost plus the oil in those countries, at least Uganda and Kenya. You'll allow energy, power to be cheap. And then other countries, you export to them, again, South Sudan, Congo, Tanzania. Here I see a business plan. I'm not an upstream guy, I'm a downstream, I'm maybe a trader, but I don't see. Now, you want to talk about infrastructure, we need a jetty for big ships. We can't berth in Mombasa today, big ships. You can't do it where today we are berthing, it's in the heart of town, it's no, safety. So you need to.
Are they making that investment or they are not yet?
I don't know.
Yeah.
I'm just saying, I'm not aware about any new jetty coming on board. Then you need to lay down a pipe over I don't know how many hundreds of kilometers, and many of them from Turkana. Where is all this money going to come? Yeah. So to put a proper refinery, it also requires investment, but I see more sense in this regards because I know how much we import every month here, Tanzania, all this belt, huge amount of money. So if you just take how much we pay ship owners to bring the product here, you're talking Tanzania and Kenya probably $7-8 million every month, times 12, times the next 20 years, just work out the numbers. You have a return on investment only on the shipping that you pay ship owners, which you can avoid. Do a refinery, connect it to KPC, to the pipeline, connect a pipe to Kampala, we are in business. That's what I see, but again, maybe I'm wrong.
Let me finish off with, you were showing me a chart, I don't know if you can put it up
Yeah,
there,
yeah,
of
it's-
your kennel co-bill. And I
Yeah,
wanted
we
to,
can put it, yeah.
and I wanted to just finish off by congratulating you. Because if we look there,
Now it's traded at 60. It's actually
this is a record high.
yeah.
Or close, isn't it?
You know, we were at a record high like 2 weeks ago, like around
17 there.
We are 16.55 after the election.
Yeah.
The re-election was announced. It came down a bit, and you see there is a correction. But yeah, we are record high on the share.
Yes, well done.
Yeah,
which is an achievement.
Yeah, we are happy.
I think the only ones who are at record highs with the shares are two companies on the Nairobi Stock Exchange, yourself and Safaricom.
Yeah. Safaricom
So well done.
We are proud to be with Safaricom. By the way, we have a lot of good relationship.
Yes.
We are proud to be associated with them. But yes, this talks for itself. We are happy.
David,
Thank you very much.
Thank you.
Thank you.
Fascinating.